Hi traders, good morning, good afternoon, good evening. I hope all of you are doing good. I'm going to explain you in this video how you can use Fibonacci retracement as a tool and understand the movement of the market and how to take an entry using the Fibonacci tool. And let's get started with this video. So today I'm using a Nifty 50 chart. As you can see, I have used a plain chart without any indicators or any moving averages today. So I'm using a monthly chart. So let's try this from the monthly point of view, then we will come down to the lower time frame. So how to use Fibonacci retracement on a trading view? You can simply go to this indicator section, and here you can find Fib retracement. So you can use this. And how do you plot it is you have to find the recent swing low, which is on a monthly time frame. This was a corona drop. Okay, from there we will mark the low of this, and then we will mark the high of the market today, which is at 19,595. So unlike the general settings of the Fibonacci, what I have done is let me show this to you. What are the setting parameters and all. I have removed all, which is 0.382, 0.236 and all that. I have just kept 50% and 61%. So 0, 100, 50% and 61%. I'll tell you why I have used this. Okay, so it's a very simple technique. So this zone is called as a golden zone. Okay, 0.5 to 61.61, and this is the place where most of the retracement will be done. Okay, and this is the point where you need to take an entry. How to take an entry, that is a separate thing which I'm going to cover in this video, but stay tuned and understand the movement of the market. So today the market has moved from here till about 19,564. So what is the kind of retracement we can expect. So let's try to look at the previous high where the market has reached. So this was on 1st October 2021. It reached this high, and from there it has come down to 0.1 15,000. It has touched about June 2022. So this was a point. If you can actually enable this 0.38, let me just enable it. Okay, so that will be your point where the market would have come close to this zone. Okay, and it came close to this zone and moved away. So what will happen if we actually enable all the zones? Let's try and see that first. Okay, so this is your basic setting which is going to be there by default in any trading view. Okay, let's select this. So what happened, market came up to this 0.236 zone and it moved from there, and this was the high point. It reached the high again there was a retracement back for about 1 to 3 months, and then it moved up. Okay, so what you can do is, if you want to look at this on a lower time frame, so on a bigger time frame, what is the market telling us? That any point of time, if you see a drop in the market from here, say from this point, which is a new high, so there is a further up move which will happen because the breakout happened from this level. Okay, this was the previous level where it consolidated for a while and then gave a breakout. So if it moves higher, any point of time, if you see any crash, your biggest bet of making a portfolio will be at this point. Let me just remove all that. Okay, so biggest bet when there is a drop. There is a drop into this zone. Okay, into this zone at this levels, any kind of crash like this, where you see a sudden crash, or if the market moves up, the crash can come, or this level can come up to this levels. Okay, about 16,000. So that will be the time where it's a golden opportunity for life for you to actually add and make your portfolio, pick up the best stops here. So wait for that. Okay, so now let's go to a lower time frame and see how it works. Let's go to a daily time frame. Okay, so on a daily time frame, this was your recent swing low and this is your high. So now 19,121 to about 19,009. This is a zone where anytime on a daily time frame, if you get this level, it's a sure shot buy. And how the buying should happen is you need to ensure that one red candle drops into this zone, and if that red candle's high is taken out by a green candle, then that is your entry point. Like for example, if this is a red candle, okay, this high is taken out by this green candles, that should be your entry zone. The similar pattern will come for you, so that should be the zone. Any support and resistance will work with this fashion, and you need to see that if a candle is dropping into a support zone, the next candle should take out the high of the dropping candle, and then that will be your entry point. So remember that. So this is on a daily time frame. 19,121 is a good support for you where you can take an entry. So now let's go to a 15-minute time frame and see if in real time it works that way or not. So let's see. So this is our 15-minute time frame. This was a recent low and this was a high which is made on Friday. So now if you see this, there's a full consolidation at this level. This was the high which was broken and there's a breakout. So as the market moves up, maybe it will open up with a little more gap, and then we can expect some, and whenever that new high forms, try to plot that. Okay, let me and then wait for this zone of 0.5 to 60.61, 50 to 61%. The candle should come into that zone, and from there it has to move up. Okay, so that should be your target. So let's try and see this on a different day. So let's mark it here. Okay, so forget that this day happened. So let's look at this day. So this was the low and this was the high. Market came into this 50% zone and it crashed below this zone. So this was a complete zone failure. So here your stop loss would have been hit. But once the zone is cleared, okay, once the zone is cleared, it opened up here and again it came into this zone, and this zone here, if you see this candle, this has taken the high of this candle, and from there the move was successful. So if you had plotted this a day one before day, so this day would have given you loss, and the next day the same level would have given you good profits, which would have been covered. Let's try and see in some other days also. Let's look for short entries. So this was your let's say this was your high and this was your low of the day. So you see it went up to the low, and the next day, where did the candle bounce? The candle bounced exactly at the 0.61% from here, and then it moved up. So let's see this on further lower time frame, how it works. Let's go a little back. What I'll do is I will try see this on a 5-minute time frame. So this was the first candle. Let's mark this. And then it made a low of this, right? So now if you see during intraday, when you got the low point, from there the candle reversed. You always wait for this zone, okay, and in this zone the candle came, and then this was a confirmation entry for you to short. So the moment this red candle has been taken out, if this green candle has been taken out by red candle, this was your perfect entry and your target was below this level. So this is how you trade, because here your trade will be this was your stop loss. So this was your stop loss. This was your reward. Yeah, this was your stop loss and reward. So you got about 0.35% in this trade. Risk to reward was 7:1. So huge risk. So this is the benefit of this target. When you actually wait for the entry to happen in this golden zone, then you will get great rewards. But whenever it fails, you will always get out with a small loss. So you don't have to worry. Your risk reward is taken care. So let's look for one more trade like this. So this was your first 15 minutes. Sorry, first 5 minutes candle on Nifty. And this was your peak which has formed at 12 o'clock. From there you see it came into the zone first and then it gave a false breakout. From there this your stop loss was hit and it has gone. So this was a failure for sure. But if you have seen this move, like first 15 minutes it made a high and then it dropped. From here we didn't get any entry, that's fine. So this is not a proper entry for us. Let's go back a day before and see this. So this was our high and this was our low. So this low which we have marked at that day still acts as a support. Wherever you see it has gone. First time it came here, it bounced. Then again second time it came to 50%. It's bounced. So ideally what I'm trying to tell you is that use this 50% entry zone for any stock. You can see, let's try to analyze any other stock like this on a daily time frame and see if we can get an entry for us to understand better. Okay, so this is the peak and this is the low which the stock made so far. Okay, so let's use this. So when it came, after marking this, it came exactly to this zone. See this 50% and from there it dropped. Now again it is coming to a 50% zone. So this is a golden opportunity for you to actually short this stock. If you see a candle which is closing below this candle, daily candle. So we need one bearish bar on this, then you can definitely short. Your target will be bottom side. So like this, you can look at any stock and analyze. Let's look at this stock. and when not to short these stocks in the downtrend. I'll tell you. See, this was the high and this is the low made, and now it's in the 50% zone. So now if any stock violates this 61% and tries to move up, okay, so then you have to wait for it to retrace back to the 60%, and then let it make a pattern. That means it has to come and retest this zone, and then it will go up. So that will be a perfect entry to take a long position. Here, as of now, I can see that it is in the zone now, and this zone, if it breaks this zone with one big candle, then the target is about bottom side. So let's look at some other stocks as an example. Let's see what Adani Enterprise. Let's see what Adani Enterprise is doing. So Adani Enterprises, we have the high, we have the low also. So we will apply this. Okay, so where do you see the stock? This is such a great tool. See this, the way it had got rejected at this level. Now, if you see, the stock can come down very nicely if you can take a short entry from here, and it can give you a big target. So that's how it has to be used. Let's look at some other. Axis Bank. I want a bullish stock to be shown as an example. So this is my recent swing low. This is the one, and this is the high which I have. Okay, so now my entry point will be 902 to 881. So this is the place where I will buy. Okay, and that too if it drops into the zone and one green bar takes away the drop, and that is the point where I am going to enter. So that means around 902 or 903 level, when it drops or at least forms a pin bar. Pin bar means like this, bottoming tail bar, which will be of this shape, or where is another pin bar? Anything which has a big head and long wick on the downside. So that kind of bar forms here, then we can take an entry if the next bar is a green bar taking the high of that bar. So that is your entry point. So that way you can analyze other stocks also. See, this is a very good example for Asian Paints. It dropped from here till here, but at 50% got rejection. Then again volume came. At 60% it got rejection. Then it gave a breakout. It dropped back. This was your confirmation, and from there you got an entry. So this is an uptrend now. It will give you a good result. It can go further up. So it's a very, very effective tool, guys. So you can use it on any of your investment ideas also. Like and now let's analyze Ambuja Cement. This was your high. This was your low. It got rejected at 50%. See this. Now this entire move would have given you how much? Like easily 50 points here. The conviction will be much higher and losing trades will be less. So even this can give you big targets. We don't know. You have to just keep trailing your stop loss. So it depends how many points you want to capture in this trade, because this will be short. Either you are saying that my stop loss is about 90, I want only 1:3, 1:2. You can definitely plan that. So this will be your entry, and your stop loss is here above this level. So you got about 12.4% risk to reward, which is very good. You got like 1:4 reward. Okay, 1:4 reward till here. Even if you wait, if till here, if you have taken, then it was 1:2. Decent enough for any one trade. You can add more concepts to this. You can add your support and resistance levels, and then you can go for big targets if you know how to hold the trade. So that's it for this week, guys, and I hope I have explained you Fibonacci retracement in a very simple manner. I'm not getting into the details of what is Fibonacci and all that. You can always Google and learn. Only thing you need to understand is how to use it in the stock market so that it can benefit you. So that is more important. Focus on that, and focus on where you have to take an entry, what should be a stop loss, and what should be your targets. So that is what you need to do. This is the entire uh, holy grail of the market, that your losses should be small, your gains should be bigger. So if you are managing this as a robot, you're not letting your losses become big and then rewards become small, then you are 100% successful in the stock market. Nobody can stop you. The randomness is there in the market. It can go up, down, but how much to lose is completely in your hand, and you have to ensure that you're losing whatever is defined in your rule book, that I will lose only 5,000 per trade. Then that is what you need to lose. So losing and winning is a part of this particular uh, market business. So you need to take it like that. And whenever there will be balls which you can play duck, you can take singles, but there will be balls where you can hit sixes. So that's how you have to ensure that you have a positive score. So that's it for this week, guys, and thank you so much for watching, and have a great weekend.